morning, traders. This is Brian from London. It's Monday, the 1st of August. Happy New Month. And the currency pair I'm looking at this week is the euro dollar. This will literally be a continuation of my trade from last week. So the bias is still to the downside. Last week I identified a bat pattern from this point here, which was a 5-point structure as X, A, B, C, D, and the D point was meant to be a strong resistance zone. Now price did fall from the resistance zone as it held roughly over 250 pips last week. It was a good trade, but now I'm looking for price to go much further downwards. As you can see, price bounced at a 30.2 retracement of the AD leg from here to here. So price bounced there, and the trend line that was connecting lows from the July 12 up to July 28 still held price as price bounced from this price level here. The retracement it rallied upward late last week and it pierced through the trend line, but actually the trend line still holds. So I'm just treating it as price tagging the underside of this trend line and moving much further downward. Now, first of all, I'll be looking for price to break this level here, which is the 38.2 retracement of the AD leg. So that's at 1.4268. Now, once price break that, then my ultimate target for this week will be around the 1.400 area. Now, I'm not sure if this will be achieved this week or next week. Anything is possible, but that's my near-term target for now. So literally, price broke below the trend line, and I stagnant that at the underside of that trend line again, which has held for now. So I expect price to move further downwards. And again, if you look at the price structure of the AD leg of the bat pattern, which is from this point to this point, you could treat this as a 5-wave rally, or you have wave 1, 2, 3, 4, 5, and a typical correction to a 5-wave rally is an ABC structure. So you could trade the decline from this point 1.4535 to 1.4225 as wave A, and the rally late last week, which pairs the underside of the trend line. So from this point to this point could be B, and C should end somewhere around this area. So ultimately, literally, what I'm looking to trade this week is a possible wave C to the correction of that 5-wave rally, which was the AD leg of the bat pattern. Now, the way I estimate where wave C will be, the possible zone of wave C support, where wave C low would be, is by using Fibonacci retracement, where Fibonacci studies of the price, the current price data I have at the moment. So you can see the retracement of the 5-wave rally. We've got 38.2 retracement at this point, which is 1.4266. We've got one at 1.4101, which is the 61.8 retracement of that zone. Now, so that's some price levels to start with. If I do let me do this first. If I do 100% of the wave A, so if this was a correction, we have A, B, C down here somewhere. And if I do 100% of wave A, project that from the wave B high, which is right there, you can see now we're having a tight zone here where possibly wave C would end. And to complement that, if I do an extension of the AB leg, so in this case extension will literally be 127, 161.8, 261.8, and so on and so forth. And as you can see, the 261.8, which is this one right here, is way below, so we can just eliminate that. The 127, it doesn't converge with any price level whatsoever, so we can eliminate that. And the 161.8, it's very close to that, to the 61.8 retracement of the AD leg, and the 100% of the wave A leg projected from the B point. So we've got that, which is in the middle of the zone where C should end. We've got 61.8 retracement of this AD leg as a lower boundary. We've got 161.8 retracement of the AB leg have the upper boundary, and to complement that, right in the middle is the 100% of the A leg from the B point. So literally what we have here is literally an A, B, C, and C should end just above 14100, which is my target for this week. So if I just get this price level out, basically wave C should end between 1.4114 and 1.4101. The medium one is 1.4107. So that being said, I'll have my target for this week to be 1.4110, just in the middle of that zone there. So that will be my target for this week. Stop loss will be above wave B, and looking at the recent price action, I'll have to put my stop loss at 1.450, 1.4450, which is right here. So it's literally above wave B and above this congestion here. So at that psychological number 1.450, that would be my stop loss. And I'm literally going short right now because this is not far away from my stop loss. But that being said, I'll be placing an entry order at just above this candle here, which is the high of this candle is 1.4394. So I'll be placing an entry order at 1.4390. I'm going short right now because I'm comfortable with this risk. 1.4450 to the price level right now, which is 1.4360. For additional entry order at 1.4390, stop loss at 1.4450, and target is just about 1.4100. So mine will be 1.4110 for this particular trade. So to summarize, price broke through that trend line that we identified last week. Now price is targeting the underside of that trend line, and I expect that to hold. Now I'm expecting price to move further downwards. This should be another strong support zone, but I'm expecting price to break below that. So once price reaches this level here and break below it, I'll probably trade my stop, just tighten my stop, and ultimately targeting this area here, which is the C point. If this is a ABC correction to this 5-wave rally, C point should end here, so that will be my target. So that's entry order at 1.4390, and market order right now, stop at 1.4450, and target at 1.4110. That'll be all. Have a good week. Good luck with your trades.